Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 10th of October, comes to you from Melbourne in Australia. I'm still here after speaking at the IFTA, the International Federation of Technical Analysts Conference, on Friday, and I'm just covering this now. I'm on the road this week, and so I'm 10 hours ahead. So we've got the Australian market open, but we're not yet open and most of Asia is open, but we're not yet open in Europe. So just looking at where things are as we go into the start of the week. Dollar strength is back. We're back above the cloud on the short term. Remembering my weekly, my daily, and my 60-minute charts, my long-term, medium-term, and short-term view of the market with the corresponding point and figure targets. So that surge in the dollar continues. No big surprises there. And the long-term trend is winning. Euro is sitting at 97.30 on that stronger dollar. The euro is really now stuck below parity. So we're seeing here how the trends are all changing to the downside. And against the yen, the dollar is a little stronger. So we're seeing 25-year highs here against the yen. So the yen has fallen to a 25-year low against the dollar. Sterling is back. It was nudging 115 at one stage last week. We are now back to the 110 level this morning, so back below the cloud. And the fact is that we do still have these downside targets, which have been in place for a very long time. So you're hearing all the media story about sterling, but the reality is we've been in a downtrend for some time. Against the euro, also looking weaker, sitting at 113.70 this morning. So we are just seeing a fall away there as well. Bitcoin can't get back above that $20,000 mark, so it's really not looking great, still below the cloud on all three time frames. The S&P 500 index, interestingly, the exchanges have just changed their rules on this, so I'm now really looking more at the future because this data is more easily available, and the charts are very similar. The fact is the level's a little bit different, but the chart's the same, and we are seeing here on the weekly cloud that we have broken to a lower low. That's the really key factor. Downside targets, we've been bearish on the indices from the charts for some time. We see those downside targets, you just can't ignore them. Looking at the Nasdaq, we were down nearly 4% on Friday, so really bad end to the week. There is support here on the 1% chart, but we do have these downside targets, and of course we're bearish on all three time frames there. The FTSE future, we just can't get back above that 7,000 mark at the moment. So really interesting how we're just sitting very much there. But the reality is the UK market looking a little bit better than most, but it is still rolling over and winding over. The DAX in Germany had a pretty bad week as well. That 12,500 level is broken. That's a just descending triangle there. You can see that in the chart. So we've got that sort of downside there, and then if you put the horizontal on, and of course the rule of thumb of the downside triangle is the height of the triangle is the extent of the move. So and then of course we've got the point and figure targets confirming that as well. So not looking at all good in Germany. Japan is actually down 1%. So quite interesting there, just seeing the market there still not looking good, rolling over as well. The Hang Seng down 1.3%. So we are again seeing this is not at all a good looking market. The Chinese market was down 0.5%, but again below the cloud for ages now on all three time frames. And the Sensex in India not yet open, and just really struggling to break that 60,000 level to activate an upside target. Looking better than most markets, but still not great. The Aussie market, which is actually open and where I am at the moment, down 1%. That big fall in the US on Friday hasn't helped matters. So we are just seeing there that we are just falling away this morning. We're bearish below the cloud on the medium. We haven't yet made the lower low the way we have in the US, but that's looking inevitable. but of course the Australian market is a little bit better, being a resource-laden market. But we've just got to watch that. We've got downside targets there, and almost certainly we will feel some of the pain from other Western markets here in Australia. I'll look at the energy mix in a minute. Some of the soft commodities still looking pretty good. Sugar is up 1.25%. Wheat is also up slightly this morning. So we are seeing grains just holding those trends. That's key. That came out in our monthly global report as well. Gold is actually back below the $1,700 mark this morning, so that's quite significant. Just can't hold on to those gains, so we've gone back into short-term territory. The recovering gold prices need to break 2,000 to run to new highs. That's what we need to do. Palladium has actually featured a little bit better lately. We see here the base of the recovery that's showing up quite nice on the daily cloud, but it's slow. Looking at US tech stocks, we've got the interest rate futures. We're seeing, the bond yields in the US. They were up again last week, so we are just seeing here. We did see that trend of all three, and we've activated an upside target on the 30-year to 6.4%. Not something that people really want to contemplate, but that's what's the targets say. Apple sitting at 140. Remember, the key number for Apple is if we fall through 130, that's a new low, and that would not be good. We have seen a succession of lower highs, so don't be surprised to see a lower low. Moving below the cloud on the daily, and of course bearish on the 60-minute chart. We do have targets into the low 120s, so it's quite conceivable that we will see Apple break that. Amazon down nearly 5% on Friday, not looking good there at all. We're below the cloud very, very clearly there. Google down 2.6%. And remember, these tech stocks are really driving the market, so no big surprises there. Microsoft down 5%. So we're really seeing this sell-off in tech stocks really starting to settle in, and we've got the targets here. So bearish below the cloud on the weekly there, and Tesla also looking lower. And just starting to turn more bearish there on the weekly chart, but the daily we're already through. Of course, we make lows below this level, below 200, and Tesla starts to look very vulnerable indeed. Downside target met there. Notice we've got not much further to fall. We might need to see a relief rally and then a new target generated. Looking at the energy mix now, we've got Brent crude this morning just below $98, so waiting for the London market to open there, breaking the trend. We did highlight this in both our daily and weekly reports that have been written and ready for clients this morning, and we do see this move here, but the interesting thing is realistically we've got to get back above that $100 mark. US nat gas is looking pretty bearish for the week ahead. That's down 1% already. Below that $7 level is pretty critical. We're seeing coal prices breaking their uptrend as well, and looking at gas prices for the week ahead, as well as power prices, where we're seeing breaks of key levels, and that's actually covered in our reports. That's it for today here from Melbourne. Until tomorrow, happy charting. See you then.